Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my micro expanding flat ABC scenario where we're looking for a 3-3-5 wave move to the downside where price is currently inside the green wave B and then a WXY. The most common target for this wave B as well as the wave Y is this white box over here that you see sitting between 31.9k and 32.4k, which is very close to the 2022 range highs for there may be a liquidity grab and a move towards the downside in a wave C, which has to be a 5-wave structure. It's an impulsive structure towards the downside. Now in this particular scenario, this then over here or very close is going to be the low of X. So maybe one move down to wick this low and then up, that's fine. That's what I would respect. But if we continue, then the next target area is going to be the 29k lows. Because inside this wave X, what we preferably be looking for is a regular flat, which is a 3-3-5 wave move. Now a regular flat is quite rare, but it is possible in this particular scenario as this high over here hit the most common target area for a regular flat, which is the 1 to the 105 Fibonacci taken from the high of the W to the low of wave A, because this also is an A, B, C structure where then wave C is a 5-wave move to the downside. And I say that we might potentially see another low in the making, because you could count this as a 1, 2, 3, 4 and then maybe another 5 to finish this impulse and then continue towards the upside, at least in this particular scenario. If we're not gonna wick this low and continue down, then as mentioned, the next support box that I have is between 28.8k and 29k. If we go to the second scenario, we're not going to go up for the 32k highs over there. We're actually going to continue towards the downside. However, we do so in a corrective structure, WXY, and then a bigger wave Y. So over here, we're looking for a 3-wave W, 3-wave X, and then a 3-wave Y to the downside, where the most common target area for wave Y is between the 1 and the 1.236, taken from the high to the low of W to the high of wave X, sitting between 29.4k and 28.9k. Now in this particular scenario, we then have that regular flat as the first structure in this wave Y, after which you then expect a bit of a bounce and a range, maybe throughout the weekend, before then a move towards the downside, a continuation for the target area for wave Y in confluence with the blue target box around 29k, which is very, very interesting indeed. If we then look at the final scenario I like to show you before we go into CVD and probabilities, then we have an expanding flat or regular flat on a higher time frame in green. So we have a 3-wave A, 3-wave B, and then a 5-wave C to the downside. Now, in the other scenario that I showed earlier, wave B is still in the making and then a WXY, right? But in this scenario, wave B is already in. So over here, we then have a 3-wave W, a 3-wave X, and then a 3-wave Y. Now this wave Y in time is very, very short. As you can see, this wave Y is much shorter in time compared to this wave W as well as this wave X, which is very rare. It's not really something you like to see. Usually wave Y could be, quite similar to wave W, or at least a 0.618 relationship in time. But if I take a fib time from the low to the high of W and I then put it on the low of wave X and I toggle on the 0.618, you can clearly see wave Y isn't even close to the 0.618. Instead, it is actually before the 0.382. There you go. And usually in wave relationships, I like the relationship between waves to be at least 0.382, which is not the case in this particular scenario. So that is quite rare. Now in this scenario, price did not hit the 105, and that is actually important because if we are looking at an expanded flat, and I quickly toggle this green to make this clear, an expanded flat most common target is the 1.236 to the 1.38, and the 105 is a rare target for an expanded flat A, B, C. And if the 105 would have been hit, it is a rare target for wave B. And then the target area for C would be between the two 1.618s. That's the most common target area, which is between 28.3k and 28.1k. However, price did not hit the 105 over here. And that's why I turned it white, because for a regular flat, this can work. A regular flat most common target is between the 1 and the 105, taken from the high to the low of this wave A, which has been nicely respected, for then a wave C to the downside, where then the most common target area for this wave C is going to be this white box between the 1 and the 1.236 taken from the high to the low of A to then the high of this wave Y, which is the high of B. So this is then the area you'd be looking for, which is in confluence with the target box that we have in blue. So that could be quite interesting, but again, a regular flat is quite rare and we have to wait and see if this support is going to hold. I would accept another move down to wick the low and then up, but preferably not actually. Why? This is going to be quite interesting. You're going to love this. Double tops and bottoms. I talk about it quite often because they are a magnet for price. And the highs and the lows that I select over here, double top, wick, move down, even with a back test. Over here, we had another double top, wick, move down. Double bottom, potentially a move towards the upside. At least we already had a bounce from this wick, so that is something for the scalpers, but then we have to wait and see, of course, if this holds. But double tops and double bottoms are like a magnet for price, and it's always good to keep an eye on double tops and double bottoms because they're so valuable and very, very easy to trade as a swing failure pattern move, where price then wicks the high over here and then wick above, close below, and then the close is going to be your entry. You're going to be looking for lower prices with the stop loss above the wick. That's the way you then trade a double top or double bottom. It's a swing failure pattern trade. Very interesting indeed. If you then look at the CVD divergences, then, well, locally we do have some bearish CVD divergences, but preferably I like to focus on the right side of this low instead of comparing it with previous market structure. So if we go to the 15, then what you see, actually the 5 minute, that's better, is that we have a lower high on price, but a higher high on the CVD. There's bearish divergences, then the target is going to be these lows, but I prefer to see bearish CVD divergences more locally here on the right side. Now, if we then do look at CVD divergences, we had a bit of bearish CVD divergence over here, lower high on price, higher high on both blue and yellow CVD, for then at least this push to the downside. Now, these divergences already played out because the low was taken in the middle, and now very, very locally those CVD divergences are neutralized, and we have to wait and see what happens on the local time frame. Are we going to take this low or not? That's of course the question. If we then look at the probabilities between the different scenarios, then I have to zoom out to the 1 hour, and my preferred scenario at the moment would be potentially another move up. Now that goes a little bit against the double top that we already wicked, but I still think this scenario from a trading psychology point of view is super interesting, because what happened, I actually did a live stream just now for Discord and the Telegram group that we have, so for all the members in there, and the title was like, I can't say it on YouTube, I don't know if it's going to be like bad for the video, but it was like mind games basically, where over here taking the high, breakout longs getting wrecked over here, the stops from shorts are taken, price moving down. Then over here, people going market short because market structure change, for example, as well as potential longs being stopped out, then moving back to the upside. And then over here, we have the market longs again, or the breakout longers, for then again a move to the downside. And that is very similar to this scenario I shared this morning, where you have a move up, looking for a move down, and then another move towards the upside. That would be so interesting. So yeah, this is currently a scenario that I would put on the number one spot. And on the second spot, I would put this one over here, where we get a bit of a range before continuation to the downside. And then finally, it's going to be this one where wave B is in, and we're going to be looking for lower prices in then a straight line, because a wave C is a 5-wave move. So it has to be like a, an impulsive structure to the downside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.